Predictions are dangerous.
We absolutely need more inventory.
The Fed doesn't actually have a lot of tools to regulate inflation.
That cash has dried up.
Wow, is my first thought, Bruce.
If both parties don't win, it doesn't happen.
The Real Look. Trending news.
G'day. Today's Wednesday, October 18th. I'm Bruce Hardy.
And I'm Chase Williams.
And this is the news you need to know. Well, the White House on Monday announced a series of new initiatives designed to boost U.S. home ownership, alongside data detailing housing aid that has been provided since 2021. Now, new initiatives including allowing home buyers to leverage income from accessory dwelling units, or ADUs, expanding mortgage lending for U.S. tribes, the launch of a new pilot program at the U.S. Department of Agriculture, which is the USDA, for alternative eligibility criteria and additional home retention assistance programs for U.S. veterans. Now, the U.S. Department of Housing and Urban Development, or as we know, HUD, announced through the Federal Housing Administration the publication of new policy designed to allow homeowners to use a portion of the actual or prospective rental income from an ADU to be added to the borrower's effective income for purposes of qualifying for an FHA-insured mortgage. So, Chase, what are your thoughts on this?
It indicates the belief by the government that homeownership is a good thing. It's a good thing to, in their way, regulate around helping people do it easier. And so a lot of these programs that you're mentioning are meant to do just that. And I think that's awesome. As Americans, homeownership is something that is very important to us. And we know, because we've looked at the numbers, how important it is to helping people build long-term wealth. I love any time that the government is encouraging homeownership. And they even said, right, it's meant to help families establish generational wealth. And so this is just, putting their money, our money, where their mouth is, right, and supporting and doing that. And certainly to some of those specific groups of people as well, with the tribes and the veterans as an example. So I think it's a fun announcement, given the challenge we've been having in the real estate news lately.
Absolutely. Well, and we know affordability is an issue. I mean, what a great opportunity for first-time home buyers, right? To buy a property with an ADU or to add an ADU to a property so they can increase their income to offset the cost of that mortgage. I think that's really fabulous. Additionally, HUD will also continue to work on updates for its 203K rehabilitation mortgage insurance program. Their announcement said that FHA is considering potential policy changes that could increase the funds available to borrowers to make renovations and repairs. And other policies under review would permit more time for completion of those improvements. So again, another opportunity for people to buy less expensive, perhaps run down or injured property and put money into borrow the money as part of the 203K program and actually rehab that house. Again, as they said, it creates generational wealth. So I think that's a fabulous opportunity as well.
Yeah, the FHA commissioner, her name's Julia Gordon. Matter of fact, she said in a statement that the new policies are designed to help people build wealth that stems from homeownership and is also designed to help boost the supply of affordable housing in many of the neighborhoods where it's most needed. That would be the ADUs, right? So that's another dwelling unit that would increase the density in some of these areas where there's really not any space or wasn't before for anything else to be built. So yeah, I think that that's absolutely right. We know that generational wealth can be supported by homeownership, and giving more people the opportunity to do that is always going to be a great thing.
Additionally, in their announcement at the White House, they said that the Consumer Financial Protection Bureau, the CFPB, is also currently developing reforms to existing rules to help homeowners when they have trouble making their mortgage payments. So again, this is the government doubling down, right, on the idea that home ownership is important. We call it the American dream. And I think this is a big deal going forward. So I'm excited to hear this news. Mortgage rate lock volume fell, surprise, 20% in September, and that's led by a combination of seasonal decline in purchase activity and rising interest rates. And that's according to Optimal Blue's Originations Market Monitor report. Now, that's a mouthful. In fact, September's rate lock decline continues a 4-month trend of falling mortgage volumes, with month-over-month purchase locks down 20%. Cash out refis down 17%, and rate or term refinances down 18% in September. And in fact, total loan volume fell 33% over the same period compared to a year ago. So as you hear those numbers, what's going through your mind?
Well, certainly, Bruce, we're well versed and had a lot of conversation around the slowdown of the real estate market. And yet it's actually 39% down from pre-pandemic levels in 2019. So if you take out a couple of those kind of crazy years for lots of reasons and go back to all that, it's still down significantly. And of course, we know that these rates have put a lot of people on the sidelines, right? Especially those that are rate sensitive. In fact, Bruce, Scott Smith, who's the CEO of Optimal Blue, where some of this information is coming from, said that they continue to see average credit scores remaining high, suggesting tight credit availability and a relatively small cohort of buyers who can make a purchase in this historically unaffordable environment. So summarizing that up, a lot of the borrowers, they're not rate sensitive, right? They've got great credit scores. They've got money. They're still able to purchase and make a move in this challenging environment for those that maybe aren't as capable or able to do that. So it's interesting to watch, and I wonder how long it will continue.
You know, it's interesting, right? So conforming loans, which still make up the majority of the loan production, came in at 57% in September. That number is down. And the reason it's down is because FHA and VA loan production both gained in activity share, with FHA being 20.6% and VA 10.4% respectively. And I don't think any of us should be surprised by that, Chase, because what that reflects, right, is down payments. It is more and more difficult, right, to have enough down payment to get a conforming loan in this market because of the high average sales prices. So we're seeing more and more borrowers go to the government-backed loans like FHA and VA, where you can get in for as little as 3% down with an FHA loan or 0 down if you have VA eligibility. So none of this should be a surprise, I don't believe.
Yeah, it's not. And of course, the average loan amount actually increased to $353,000 in September, which should indicate exactly what you just said, while the average purchase price on lock loans actually remained the same at $450,000. So it'll be interesting to continue to watch what that average price lock does and how that affects average prices in general.
Well, more good news, Chase. Freddie Mac is rolling out a free tool for lenders called DPA One that matches borrowers with down payment assistance programs across the country. Now, DPA One streamlines the available state programs into a single source that lenders can use to find and compare programs for their borrowers. Time and again, research reveals that the down payment is the single largest hurdle first-time homebuyers need to overcome to attain home ownership. And that was from Sonu Mittal, Senior Vice President of Acquisitions at Freddie Mac. And he also said, but finding and comparing the many programs and their guidelines is challenging. So what are your thoughts here?
Well, Bruce, I love this, right? We talked about that being the big hurdle, and you can see that there in the quote. And the fact that there are a whole bunch of assistance programs, to have one single source to kind of evaluate those and compare them side by side, both for the lenders and the borrowers, I think just assists in connecting the very people that those programs are meant to be for, right? And there's a whole bunch of assistance offered through state finance agencies as well as local and municipal sources. And you can kind of imagine trying to go out there and source all of this in a whole bunch of different places versus now DPA One being a tool, a free tool that supports that. I think that's a big win for both the lenders and connecting their borrowers to them and certainly the end user, the home buyer.
Yeah, DPA One currently covers down payment assistance programs for 48 out of the 50 state housing finance agencies and has local and municipal programs for both Texas and Minnesota. And by the end of the year, DPA One will have local and municipal assistance programs for Florida, Virginia, California, and Kentucky, and expects to bring the remaining local and state programs online throughout 2024. this has got to make it a lot easier for people to get access to the information around those programs. And by the way, they're going to compare them side by side because, each of these programs has different points to them and different benefits, pros and cons, so to speak. So the ability for the lender with the borrower to sit down and look at like 3 side by side like that is going to be really, really helpful, I believe.
Yeah, it seems to me it's something like the Expedia of down payment assistance programs. One-stop shop.
There you go. Well, that's the news you need to know. Don't miss this Friday's Northern Lights episode where we'll interview Matthew Ray with Keller Williams Portland Central in Portland, Oregon. Thanks again for tuning in with us on The Real Look. This podcast is produced by Marissa Frost. Visit kwnwr.com to access the show notes from today's episode. Head over to Spotify, Apple, or wherever you get your podcasts to subscribe to The Real Look. And don't forget to leave us a review. Thanks again for listening. We'll be back next week with a breakdown of all things real estate.